Welcome back, ladies and gents. It's about that time of day again, 7:30 a.m., Monday through Friday. Welcome back to our crude oil morning prep. We're going from the screens here in Los Angeles all the way to the trading floor in the NYMEX exchange in New York City. My name is Joseph James. Come out and see me every morning, Monday through Friday. My trade room opens at 8 a.m. Eastern Time each morning. We offer a free trial right on the website. Check it out, SchoolOfTrade.com. I've also got my partner in crime, my much better looking half, Mr. Marty Errico. Him and his partner, Jeffrey, they do a great job every morning with a live broadcast directly from the NYMEX exchange. Check them out, tradersaudio.com, 8:50 a.m. Eastern Time, just a few moments before the opening bell for crude and nat gas. All right. Plan this morning is pretty simple. Once again, I'm a technical analyst. I'll be starting with some screens here this morning. I'm looking at charts. I'll be using a top-down approach. That's not me. That's Mr. Marty. Let's go back in time here. There we go. As I was about to say, I'm a technical analyst. Again, my name is Joseph. Welcome aboard. My job today is pretty simple. I'm going to start with a top-down approach, meaning a slow time frame first, move to a faster time frame second. I'm going to analyze what happened overnight. We'll analyze what happened in London. I will try to anticipate direction at the open. If I can anticipate direction at the open, well, then I can find high percentage trading opportunities, and I'm going to start looking for those opportunities as early as 8 a.m. Eastern Time today. So pretty easy. Start with a slow time frame, move to a fast time frame, find the direction, use support and resistance to find trades in that direction, and we're going to get started at 8 a.m. Eastern Time. Now we're going to really show you how powerful this morning prep is, because when I'm done with you, we're going to toss you all the way from Los Angeles all the way to New York City, and I've got some important information coming from Marty Errico directly from the pit. Now, this is really powerful stuff. This is the stuff that we get up here early in the morning for, because we use Marty's pit analysis for intermarket divergence, right? Crude, RBOB gasoline, heating oil, Brent crude, market direction, market internals, option prices, and those very important pit session trading levels. Guys, there are lots of scenarios where the electronic trading hours that I use are much differently than the regular trading hours that Marty uses. So be on the lookout at the end of the call today, listening in for Marty's pit session levels. We're going to put them up on the blog as well. And don't forget, very different look from the pit to the screens. All right, let's get started. Without any further delay, we'll kick right off here this morning what we usually do each morning, and that is to lay out the groundwork here. Let's lay out the plan for this morning. The most important thing we do is we take a look at what the day looks like as far as news, what day of the week, what week of the month, what month of the year. It's very important that we think like this, because each day of the week has a different personality, each week of the month has a different personality, and each month of the year has a much different personality. So what day is today? Today's Thursday. This is the 5th week of the month. That's right. There are 5 Fridays in the month of August. This is the 5th week. And of course, yes, this is the month of August. Now, what do we know about the month of August? Well, we know it's a summertime month. We know the month of August really is probably the worst price action you're going to see all year. There's a little bit at the end of March, the 3rd week in March, that tends to get a little bit sloppy, but the month of August is so easy to see. It's very, very inconsistent with volume. As we say in our trade room, it is consistently inconsistent. And so we know this morning that we go into the month of August, specifically the last 2 weeks of August, it's going to be low volume and very inconsistent price action. Okay, what that basically means is you're going to see people coming and going from the market. Traders will come in late to their desks. They'll leave early. Everyone's got something else on their minds this morning, right? It's a very simple scenario to see coming, right? Everybody wants to be on vacation this time of year, and that's what's resulting in what we've seen is we've seen reports of about an average of 30% lower volume the past few weeks. So, and that's definitely about what it feels like. It feels like about 1/3 of the folks are not here. So that's the reality. Be aware of it. Doesn't mean we can't trade August. We've done a great job in the month of August so far in our trade room, and we'll continue to do it today and the rest of the month. The 5th week, what do we know about the 5th week? Well, we know, like I said before, the last 2 weeks of August are going to be pretty rough, mostly because of that lower volume. It's just because of low volume. That's the only reason why we say it's going to be rough. The 5th week, of course, is the last week of the month. I would hope so. I don't know many months that have 6 weeks. But 5th week we know is the last week of the month, and we know, of course, with that last week of the month, that means we've got some jet fuel buyers, hedgers coming in. We've got people who are going to be entering and exiting the market at the beginning and the end of each month that really wouldn't be here during the middle of the month. Then you also have all the Hail Mary traders, all the impulse traders. You got all the traders out there that lost their shirts this month and are going to lose their jobs either trading for clients or trading for a firm if they don't pull it together here by the end of the month. So think about what you would do if you were sitting on a big trading floor at some big trading firm and you were down by 15% this month. You're going to lose your job if you don't get that, right? If you don't get yourself at least back into single digits. And of course, that's exactly what's going through the minds of a lot of these traders coming in at the end of the month, right? We get that Hail Mary trade that we see a lot. And of course, last but not least, you get the Thursday. Now, Thursdays are actually pretty big clues. Mondays are the beginning of the week. Wednesdays, we have inventories. Fridays, the end of the week. Well, Thursday is that jobless claims day. Now, today we've got GDP on top of jobless claims, but we always know that a Thursday morning is usually going to be a pretty good day. It's usually a pretty good opportunity on Thursday mornings, just like Wednesdays. Wednesdays are great opportunities too. So Thursdays are always on our radar. They're always something we look forward to. They're definitely a very different day than any other day of the week, and we're excited to be trading on a Thursday morning. So Thursday, the last week of the summertime month of August, we know we got to be careful about inconsistent volume. We know there are going to be times of a very light volume and very heavy volume. And as we look at today's news, we zoom in on today's news worksheet, we can see that we do have some reasons to expect some pretty darn good volume and volatility today. That's, of course, what we're looking for. We're looking for a combination of volume and volatility. I can have all the volume in the world, but with no volatility, you can't make as much money, right? Cue the S&P, cue the bonds, right? Those are some good examples. Lots of volume, not a lot of volatility. So here we are, GDP, jobless claims. Does anything stand out? Absolutely. These are two red star news events. We've been talking about this all week. We had one on Monday, durable goods, nothing on Tuesday, nothing on Wednesday. Here we are. We've got double whammy red star news. That means that we expect more traders to be participating this morning than any other time of the week. We've got two red star news events. Now, the reason why I say we're excited about red star news events is because, as you can imagine, everybody and their mother-in-law is going to be watching these events because I don't care whether you're a new trader, a veteran trader, whether you're a scalper, a swing trader, whether you're trading futures or Forex or trading commodities or E-minis, everyone's going to be curious about the GDP and especially about the jobless claims. Remember what happened last week? The jobless claims spiked higher last week, well above their 6-week moving average. It's a very big concern today because we saw really very low consumption from crude oil yesterday, very low demand. We saw record-breaking low pending home sales. Consumer confidence came out lower. Home price index came out lower. I mean, guys, we've seen a little bit shaky news this week after having a very blockbuster previous 2 or 3 weeks. Housing market news, demand news, a lot of the economic signals were pointing up the past 3 weeks, but this week we're getting some mixed signals now. Now we're starting to see a little bit of weakness in this housing market. We're starting to see a little bit of a weakness in the consumer confidence number. Remember, the consumer confidence is expected to be coming in a lot lower the next few days. We've got the consumer sentiment number on Friday morning. So these are all going to be wrapping together here. I think we're going to start seeing a lot of the perma bears starting to come out of hibernation and go, ha, I told you, I told you. So a little bit of frothing of good news reports over the past 2 weeks, but we know we're going to be expecting to see some volatility, some opportunities here starting at 8:30 a.m. We do have Mr. Jeffrey Lacker at 2 o'clock this afternoon. We will be listening in to him and see what he's saying. Everyone's listening in to these Fed speakers right now because of what? Because of the Fed speak, the Fed tapering. We're all waiting on next week, next Friday's non-farm payroll. Write it down. Next Friday's non-farm payroll is what every single investor, what every single long-term trader, most of the gold traders out there are waiting to see the combination of this week's news, next week's news, and it's all going to culminate at next Friday's non-farm payroll number to see if the Fed is going to begin tapering. I don't think they are. I think we're going to see lackluster reports. I think the Fed is going to use that as an excuse to postpone tapering until the beginning of next year. I don't think they want to go anywhere near messing around with what they've built up so far. So be on the lookout. We'll be watching closely. Fed speak will be on our minds late today. Volatility, opportunities will be on our minds early today. Be ready for 8:30 a.m. news. Don't forget you nat gas traders have 10:30 inventories today, right? That's your Christmas for nat gas traders, right? That 10:30 inventory report today. So be aware of that if you're trading the natty gas, the NG. Now, enough of the news here today. Let's take a look at some charts. First thing we see here this morning is we've got crude oil trading in a very, very narrow range. There are two very concerning clues on here. A very narrow range coming out of London. Remember we said we're going to look at what's happened over the past few weeks, what's happened over the past few hours, what happened overnight. We look at the range coming out of overnight. We see it's a very narrow range. We can also see we're trading right on top of the previous low of day. The previous low of day at 109.11. This is a pretty big deal. We can see that on top of that previous low of day, if we sit here and chop sideways, that tells me the market participants have no confidence buying or selling. Remember yesterday how I said we got to be really aware of price sitting on top of the previous high of day? Remember that yesterday morning? That's exactly what's happening right now. The reason why we have to be concerned is because if we had confidence, if the sellers had confidence, they'd be selling short below the previous low of day. If the buyers had confidence, they'd be buying these lows and we'd be up towards the highs. So whenever I see price sitting, trading right on top of a previous high or a previous low, that tells me that we've got some doubts in our minds about the higher prices here on crude. We also don't have enough strength or confidence to push it lower. Now, why would that be? Well, this usually will occur when there's no major news coming out, or when we're waiting for some news to come out, or after we've made a new higher high or a lower low, and you can just feel the traders are just, well, do you want to go back to the highs again, or do you want to go lower, right? Who really wants to push this price? Who's really in charge? Who's got the big boy pants on and is going to take this high or this low out? See, right now you can tell the buyers don't have confidence that we're going to keep rising. The sellers don't have confidence that we're done rising. So you can easily tell we got 8:30 news coming out, jobless claims, GDP. We know that's definitely going to be on people's minds. We also continue to hear this back and forth between Libyan officials and U.S. and UN. It's just what a joke this whole issue has become from Libya. And so we can just feel that everybody is kind of walking on eggshells, tiptoeing around today, going, okay, what do they say next? What do they say next? And again, this could happen at any moment. We talked about this yesterday too, right? We knew yesterday morning, if you remember yesterday morning's price action, we had just pulled off those fresh highs. We actually bought this pullback yesterday morning on a much faster time frame. We bought there just a little bit, got one nice fat trade out of it before it just sat there and went nowhere. You can see, again, buyers tried to push higher, but clearly they failed. So there's definitely blood in the water out there. The sharks are definitely out. But again, just like me, I'll bet a lot of traders don't have any confidence to sell this baby off. We don't know what's coming. We don't know what that next politician is going to say. We don't know when the possible strike's going to be. We don't know anything as far as when that all is going to come out. So that's what, in my opinion, is the reason why we got to be careful here. We've got to wait, and we've got to be really suspicious of the fake-out breakout. The fake-out breakouts, I'm definitely suspicious of them. I'm going to participate in the trend this morning, but we have to be aware that at any moment this thing could turn and go in the opposite direction. As we move forward here, I've got a major anchor chart here. I've outlined many, many levels of support as we go lower, 108.90, 107.87, 106.99, 105.37. Could you blame these sellers? I can see many, many opportunities here for a price reversal and then price going higher. So you can see here, looking at this chart, there's very little room for us to go lower, right? If we go lower here, we're going to have to be selling directly into some serious support. So we know we've got many levels below us that keep us from selling easily. This is one of the biggest reasons why I'll be waiting patiently to see if these sellers fail and then one more try to go higher. This chart doesn't exactly tell me, though, exactly what direction we're heading in right now because, again, if I follow the long-term trend, the long-term trend will be bullish, which means as soon as we see one of these support levels react and we start seeing price go higher again, we are going to be all over the buy side on this one. Now, trying to sell short here, it's a little bit unpredictable. So I'll move down to a faster time frame here now. And on this faster time frame, we're looking for some open spaces. We're looking for some open areas. We're looking for clues here that we can use to allow us to get in, right, to get in short. Now what I see here is I've got a brick wall of support. I've got 108.90, 108.11. I've got my trend line acting as support here, trend line acting as resistance. Does this scream wedge? Absolutely. I'm very, very concerned here that this price action is going to wedge today. So be careful selling short. You're selling right into that support. Be careful buying long. You're buying right into that resistance. Ultimately, when I look at this chart, this basically tells me that until I get above the 110.85 and below the 107.95, I've got to be careful. Below 107.95, above 110.85. Okay, I got to be careful. What I will be looking to do is I'll be looking closely here to buy the lows, sell the highs. Treat this as a sideways range. If they want to play like this, we'll play ball all day. Remember, I can make money with this type of personality, but I can't if I don't identify it. This is a range-bound, a wedging personality, which means I'm going to buy lows, I'm going to sell highs. I'm going to avoid the middles. I'm looking for fake out breakouts. I'm looking for new lower lows and yoink, right back up. Looking for new higher highs and failing right back down. Now, once we see the breakout of 110.85 or 107.95, then I'll proceed to trade in that direction. So if we move higher, again, I'm going to sell it first, look for price to break above, and then we're off to the races. Again, as we go lower, I'm buying first. If we break below, I'm off to the races. Guys, don't trade that middle. Don't fiddle with that middle. Buy those lows. Sell those highs. Be very, very careful today as we're going into the last few days of the month. We know the volume is going to be low today. We know this is going to be difficult to predict those breakouts. So be aware of the scenario, guys. Last few days of August, and we're trading in a wedge here on crude. Everybody's waiting for something. They're either waiting for 8:30 news. They're waiting for Obama to talk about Libya. They're waiting for something. You can feel it. Now I want to see what the pit looks like, because now we've looked at charts, and now that we've got the charts under control, now let's see. I'm anxious to hear what Marty's hearing and seeing and feeling on the floor this morning. We've seen 30% lower volume. Marty, great to have you back here today. Happy Thursday. Are you seeing 30% fewer people on the trading floor? What's the personality like, and what do you think they're waiting for out there today?
Oh yeah, definitely. Big decrease in actual heads here on the trading floor, so I can agree with that. I'll have to look at open outcry volume figures at least in the last month or two and see how far they're down. I remember last year it's about 30 to 40%. Open outcry volume was down, so open outcry to pit session when we trade open outcry instead of electronic. So we'll look at that. Okay, so it's basically a waiting game as of right now. We kind of find ourselves just holding these levels within that range that JJ was kind of speaking about, and I'm pretty much on board for the same exact range, pretty much. Again, we're just trying to wait and see till we hear out of President Obama's office. Are we going to, throw a missile attack? Or are we not going to have a missile attack? It looks like the UK's Parliament made David Cameron, the Prime Minister, back out supporting the U.S. So surprisingly enough, believe it or not, UK is not going to be backing us. Looks like the U.S. will have to go in themselves here and take care of this Syrian issue. So they may be coming around the corner and bombing. They were set to do it on Thursday, but I really don't know yet exactly what's going to happen. So it's a waiting game. A lot of traders just sitting around waiting for this, especially now in the environment that JJ explained, that we're at the end of the month, right? We have some physical delivery buyers. They're called EFP orders, exchange for physical. They come in, they buy physical delivery of the product, so we tend to see that, and then the cost of storage comes into play and all that stuff like that. But we have some of these larger players coming into the market, so we can get sporadic spurts of volume and buying come in, right? You might not know what exactly it is. It's the jet fuel buying, and it's the cruise liner buying, and physical delivery buying. So real quickly, I have natural gas inventory numbers today. We are looking for 65 BCF. It's been the same expectations now for the last 3 reports, so nothing new out of that. Anything above 65 we're selling, anything below 65 we're buying, and it's simple as that, really. 65 BCF is what we're looking for. Looking at your natural gas real quickly, and then we'll look at your crude again. Natural gas here has been in this bullish channel. You can see we're starting to work our way back down below again. The 355.60 will be selling back down to about those 354 evens, 353 evens, and then we'll try to buy this. But again, it's hard to trade within this channel, especially with such a big news event coming out. So really you have to wait till the news comes out, and then we'll get an idea on direction and which way we're going. Again, it's kind of been the same thing all over the place. The dollar here has been really in a respectful risk-on sentiment with the crude, which has been nice to see lately, right? We haven't been seeing that. more and more right now. The dollar has been just kind of drifting higher, 81.90.5, right? Crude has been just drifting a little bit lower, pretty much sideways. So a lot of paper selling. A thing I have not seen ever in my whole entire life on the trading floor has been the put skew right now is negative. I don't know if anybody ever realized that, but the put skew is negative. That means everybody's trying to get in and buy, at least in the little small world that we call the crude oil pit, right? The options pit, the outright pit, very busy in there last couple days, but the put skew's gone negative, and there are traders that have been down there. Everybody made a switch from options to outrights about 5 years ago, right? And I probably made a similar switch 5 years ago, but the point being is I speak to these traders and we haven't seen a negative put skew ever in the 5 years that we've been down there, or the 20 years that most traders have been down there. So I haven't seen it in 5-10 years, never seen a negative put skew, but it is there, and that simply means that there's a lot of buyers in this market and people want to buy this thing on up in the options and also in the outrights. So very interesting on that note. We're going to continue to keep an eye on these charts. Again, we have support, obviously, down at the low of day from yesterday, right? We have that trend line support. So, again, 109.11, 108.5, basically, below 108.5. Then we really have to reconsider looking at some things. Levels real quickly here. Let me just give you guys some levels. We've got to run here. Levels we got from yesterday's pit session, 107.70, the high, the low, 109.29, closing settlement number, 107.07. 110.07, 110.07. Daily pivot today, we have 110.02, resistance up above, 110.75, 111.43, and 112.84. Support down below, it looks like we got 109.34, 108.63, and 107.20. So those are going to be some levels of support resistance that we can kind of, trade around. To me, in the pit, it looks like they're trying to buy just a bit here. Again, negative put skews. They have been basically bid vol offered out on gamma. They've been just kind of holding some long positions and continuing to buy. So that's basically what's been the sentiment on the trading floor, and especially as we await the president's decision in terms of just what he's going to do in Syria. He's going to be briefing some congressional oversight committees today. So they're going to be meeting at the White House. Some senior officials there in Congress he's going to be meeting with, so they may be coming out with a decision very shortly. And Thursday was the day they said they were going to do a missile attack. All right, so everybody's waiting on that. If he does it, it's a buy. If he doesn't, then basically it's going to be a very upsetting sell. Simple as that, right? That's how you play that for anybody who's asking. All right, natural gas, we have a large inventory number today. We're looking for 65 BCF. Pit session high from yesterday, 358.60. Low was down to 351.10. Closing settlement number 358.30. Daily pivot 356 even. Resistance up above 360.90, 363 half, and 371 even. Support down below 353.40, 348 half, and 341 even. So really watch natural gas. Again, expiration yesterday of the September contract. We're front month October. All the money now is in October. So we are going to get some decent volatility as everybody now rushes into this October contract and wants to establish a position in the natty gas, right? If we get below 350, yes, that's going to be some nice selling activity, I believe. So just watch the inventory number. This is going to give us an idea on direction, as we're going to be looking again to sell below 350, sell below those 55.60 even we're looking to sell below, and then also those 50 evens we're going to look to sell below. And if we could buy the bottom of the channel, go ahead, but if not, then we're going to continue with selling frenzy. Let's see what kind of inventory number we get today. So that's all I really got for you guys here. We'll speak of that, go over to JJ in Los Angeles, and I got to get going.
All right, guys, thanks so much for being here. I appreciate it. Got to take off the mute button on my microphone, of course. It's almost the end of the week. Got another exciting day out there, guys. Another exciting day out there for us. We got 8:30 news to look at. We've got, news out of Syria. We got the geopolitical news. We've got GDP and jobless claims at 8:30. Guys, we don't quite know what direction we're headed in this morning, but we know something's going to be breaking out here. If I had to guess, I'd say we're buying here this morning. It sounds like that negative pit skew, the put skew that Marty was talking about. Sounds like those option buyers are all bullish right now. Don't forget, 30% lower volume today, end of the month of August. Be careful out there. So we're going to err on the side of caution and stay patient this morning. We're looking to be bullish today on crude. We know we've got natural gas inventories at 10:30, as Marty addressed earlier. I've got the blog updated with today's notes from Marty's broadcast. And guys, once again, if you want an invite here to come see us, you can get the links delivered right to your email box. Just shoot me an email, jj@schooloftrade.com or marty@tradersaudio.com. Don't forget to check out my trade room every morning, 8 a.m. Eastern Time. We got a free trial on the website. Check it out, schooloftrade.com. And, of course, head over and see Marty and his partner Jeffrey at 8:50 a.m. Eastern Time, Monday through Friday. Over at tradersaudio.com. They broadcast live from the NYMEX exchange. Guys, don't forget, too, we've got no broadcast tomorrow, nothing on Monday either. So we'll see you guys back here on Tuesday, next Tuesday. Okay, so no morning prep broadcast on Friday for the holiday weekend. And, of course, the holiday is on Monday. This is the end of the summer, guys. You made it. You made it. Everybody still got all their fingers and toes, right? Nobody bleeding? I think we made it to the summertime. We got a few more days here to make it through the month of August, and then we're off to the race in the month of September, and it gets really good from here. If you ask me, we're coming right into the sweet spot of the year, the end of the year, the last quarter of the year. So we'll see you guys here Tuesday morning, 7:30 a.m. Have a wonderful Labor Day weekend. Don't forget to shoot me an email with some feedback and a request to attend Tuesday's trading session. Have a great day out there, guys. Don't forget to learn it so you can earn it. Adios, amigos. Bye-bye for now.